I'm Professor Indra Sekra. In this video, I'll give you an understanding of information systems from an accounting perspective to an information system. The first one is data, the second are the processes, and the third are the controls. So the data are generated internally, and data also could be accessed externally by enterprises. So there are processes that take place in an enterprise. They reflect the activities undertaken. When activities are undertaken, there's data that's been generated. With all this data being generated through processes, and these processes include applications, there has to be process controls. In addition to those process controls which are applied at operational levels, at a strategic level, at governance level, there are also controls that are populated or developed which are called purposive controls. So an information system control risk relating to data and processes. So there are application controls, which is a subset of process control, and then there's process controls. And application controls will generate data, and there's activities. There's process controls generate activities, and the purposive controls, through the governance structure, they generate data and activities. So these controls that have been applied in the application, it's applied to data and activities. Then the process controls are applied to activities, and purposive controls are applied to, again, data and activities. How does data get converted into information? It is through association with the events and or the objects. So there are various forms of data, and data are facts about events and objects. It can take numerical form, or it could take textual form, or it could be figurative charts and figures, or it could be also take monetary forms. Then there are objects, and these objects could be audio, video, pictures, and there are also events, the occurrences about resources of interest to the enterprise. And examples of these events could be a sale, a purchase, and so forth. So it's by associating the facts about events and objects with the events and or objects that this data is converted into information. So information are far more meaningful, and that allows the actors in the enterprise, or the managers or the staff in the enterprise, to make meaningful decisions. When information is being produced or data is being produced, they have to be controlled for risk or the inaccuracies. These are being controlled through enterprise policies and procedures. So these policies are being populated through the governance structure. They are purposive controls, so they provide the umbrella to to come up with various procedures. And the process controls are the procedures that are applied at operational levels. So both the policies and the procedures, or the policy controls and the process controls, where application controls are a subset of process controls, they are subjected to audits to ensure that these policies and procedures are complied with, to ensure a high level of accuracy of data, and data then being transformed into information in making decisions. So if you look at an enterprise can be looked at in different ways. But an enterprise system is something that integrates information across all functional areas. So there could be functional areas like finance, marketing, purchasing, production, human resources. These functional areas in an electronic platform, electronic business model, enterprise model, are linked through various processes, and they are electronically linked. So they are electronic businesses. They are called e-business, and these processes are designed by governance team to provide reasonable assurances, and there are controls that have been applied for these processes to ensure that it provides accurate data and information. When an enterprise becomes large, this information being integrated across various functional areas are done through enterprise system software. An example of that is an enterprise resource planning system. There are different types of enterprise resource planning or ERP software systems. Three examples of them. One is Microsoft Dynamics 365, SAP Business One. Then the third is Oracle Cloud. There are three streams in an enterprise accounting information system. The first one is the enterprise resource plan, or the ERP system that integrates information. And the second is in an electronic platform, is the e-business, or the linking of the processes electronically. And the third theme are the internal controls that are applied to manage risk. Sarbanes-Oxley Act 2002 brought in to ensure that there's adequate controls to mitigate risk in enterprises. So there are a number of sections that becomes important to be reminded. Section 404 of the Act and the Public Company Accounting Oversight Board, or the PCAOB, Auditing Standard number 53, have made changes for both auditors and companies that they audit. The second is to comply with the Sarbanes-Oxley Act. Management must identify, document, and evaluate significant internal controls. And the third is the section 409 of the Act requires disclosure to the public on a rapid and current basis of material changes in organizations' financial condition. And the fourth is organizations' accounting information system should be able to produce financial data in a timely and accurate manner. When we look at an accounting information system, there are various elements in a study of an accounting information system: technology, databases, reporting, control, business operations, events processing, management decision making, systems development and operation, communications, and accounting and auditing principles that apply to reporting and controls. The technology is about the technological infrastructure, hardware and software. Databases is where data are stored. Reporting is about who and what information is shared. Controls are the passwords, biometric identification, who can access information, and compliance reviews and audits. Business operations are activities undertaken relating to resource use in the enterprise. Management decision making is about the decision types and who makes those decisions. And systems development and operation is about developing and operating systems, and often system development life cycle is used for this purpose. An example of how and where information resides for a given event, we can take a sales event. Salespeople enter customer orders, then it's been informed to accounting, and accounting generates an invoice to customers, and that is then informed to the warehouse. The warehouse will assemble the order. Then the assembled order will now go to the shipping. The shipping department will send it to the customer with a dispatch order, an invoice, and the accounting department will now get the dispatch order as delivered, and will record an accounts receivable. So what it shows is that this information in relation to the sales event is now in various places in the organizations. The facts relating to the sales events are in various places in organizations, in various functional areas. And to make meaningful decisions about that sale at a given point in time, that this information should be integrated and understood comprehensively, so that accurate decisions could be made. So that brings to the end of our discussion. Thanks for watching.